Great. Okay. So just to give you a bit of background on why we decided to, oh, Zoom's running away from my slides already. It's a good start. On why we decided to host this webinar, we've had a lot of people kind of coming to us and saying that they would love to, from a Chaser's perspective, would love to use Chaser. They're thinking about moving to the cloud. What are the steps? How do they actually make that move? And I know I've seen as well on social media a lot of people saying that the current situation has just been making them reevaluate their current processes and try and look at how they can improve that to just kind of put themselves in the best position possible. So we thought we'd bring together a collection of experts who can give actionable kind of practical advice on how to actually make this move, if it's possible to do it now in the current climate, and how to do it as quickly as possible. So I'm sure a lot of you are familiar with Zoom now, especially considering some people are working from home. But just in case you're not, there's a chat box on the bar at the bottom of the screen. So if you do have any questions throughout the webinar, please just put them through in that chat box. And it would be great just for us to know as we're chatting, what has driven you to kind of look and make this change and that kind of thing, and why you're thinking of moving to the cloud. So yeah, please don't be shy with questions. We will answer as many of them as we can at the end. So first of all, we'll just give you a quick introduction to each of our panelists, and then we're going to go through the how, the who, and the what. So it will be approximately 40 minutes, and this will be, as I said, practical, actionable advice and next steps you can take at the end of this webinar. So we're going to go through and introduce each of our panelists. I'm your host for this webinar, so my name is Molly and I work in the marketing team here at Chaser. David, do you want to give us a quick introduction, background, and why you've found the love of cloud accounting, I guess?
Sure thing. Hi everyone, my name's David Tuck. I'm the founder and CEO of Chaser, and so started Chaser just under 6 years ago to transform how businesses can carry out credit control in the cloud, getting their invoices paid on time. So that was off the back of my first cloud accounting experience as an accountant and finance director. So the last company that I was an FD for was my first experience of working with a cloud accounting system, having used desktop accounting software previously, and just seeing how transformational the cloud was in terms of my and our ability to run a finance team. So that then sort of started the love affair that has been carried forward with Chaser as a cloud product that integrates seamlessly with cloud accounting systems.
Nice, thanks. Stuart, you're next on my list of Twitter handles here, if you want to take it away.
Indeed, yep. So I'm Stuart Hurst, cloud director. My dog's literally just sat aside there ready to jump up as I start speaking, as are these things. So cloud director at UHY, I've done over 1,000 cloud conversions, of which 998 have been fantastic and 2 went pear-shaped. Everyone always asks me about those 2. So I've got a lot of experience about it. I've worked at, say, a large national firm overseeing 24 offices, and I've also worked at a smaller village accountancy firm prior to that, again, doing cloud conversions. So I've done a lot around that, moving people from desktop to cloud, and then also the app advisory and kind of supercharging things beyond step 1, if you like. So very well experienced with that. Yeah, that's me.
Nice. Charlotte?
My name's Charlotte Ing. I'm a manager at Sagars Accountants in Leeds. I have a portfolio of owner-managed business clients, and I specialise in cloud, so do conversions for clients, training, app advisory services, and I really think that the cloud benefits everyone because of the efficiencies that are involved when using the cloud.
Nice. Cool. And Matt?
Folks, my name's Matt Flanagan. I'm MD of a business called Bluehub. I'm not an accountant. We implement cloud systems in and around the cloud accounting ecosystem. So we have an understanding of things like Xero and QBO, but we tend to working alongside the other areas. So that could be other areas of finance function, or it could be other operational system, tills and stock and things like that. So we've been doing that for 5 years, got a team of 11 who just solely focus on that type of digitization. And I'm also a business owner who uses these tools as well. So also a consumer as well as an implementer of this type of software.
Nice. So we've got a large range of perspectives here. I've also put everyone's Twitter handles here. If you want to engage throughout the webinar or afterwards, please do feel free as well. So firstly, the how. So the big question, I guess everyone on the webinar is probably wondering is it possible to move to a cloud accounting system now? And what are the challenges that face that? Stuart, I might come to you first and get your thoughts on this, considering the 998 successful conversions. But given the current climate, people are working from home and they might not be able to necessarily meet in person and do all of this. Is it possible from your perspective to get this done?
It's certainly doable. Challenges have changed slightly, but it's still doable. It's been interesting because it's meant that there are some conversions that were almost off the cards or resistant that are now more open, and it's got actually easier, and others that have got more difficult depending on the current setup with people. So yeah, it's possible. A big one at the moment is staffing. Like if the staff are actually still working, the biggest obstacle is furlough. If staff are furloughed, then obviously that restricts data and getting information and getting things ready. What we're tending to find is generally that finance teams are continuing. They're quite an important function for the day-to-day running of the business, and it's probably never been more important to be on top of your numbers. So it's possible. Challenges, I mean, what we always say is having up-to-date data as much as possible is a big deal. So we won't generally do conversions unless a month end is up to speed and ready. And again, the side effect of COVID, a positive if there is one, in terms of people keeping data up to date and bringing things live, there's been a real effort in that sense when people need bounce back loans or C-bills, that they're keeping information up to date and getting management accounts together quicker than ever. So that's been less of a problem. The remote thing can be difficult sometimes. It depends what source data people have got access to in terms of documentation. And sometimes we're seeing on conversion, we may be part converting or not doing all the features straight away. Some of the digital capture that's available because you simply can't get to the office to get some of the data. But it's doable. But the reality is, when it comes to training, I would say even before COVID, probably 50 to 60% of our training was done online via Zoom screen shares, particularly for the kind of the core Xero QuickBooks training that was done. So it's certainly doable, and we're probably finding that now timeframes, people are working outside the 9 to 5, so it's almost sometimes easier for people to fit things in different modules, and we can be more flexible, and other people are more flexible. In terms of functions, I mean, go on, sorry.
No, I was just going to say, I'm sure there's people on this webinar who are potentially overwhelmed at the amount of data they would have to get prepared and all of that type of thing. So you were saying there's potentially some things that you could focus on doing as a priority more than others. And I just wondered what you would advise, and anyone else feel free to jump in as well, but what things you think are the kind of minimum things you need to focus on when doing that.
Yeah, I mean, your bread and butter, I think, your bank reconciliation is nailed on, and your debtors and creditors balances, really, those are kind of like the crucial ones. And when we do a conversion, if we were doing this for the end of May to move you over, we wouldn't do it on the 1st of June. For me, that's madness to do it on the day after, because very few firms have their accounts closed off month end the day after. So we'll normally do a conversion 2 or 3 weeks after month end. So if we would do month end of May, we'd say mid-June, back end of June even, right, we'll convert the May data, and that'll be crystal. But carry on posting your sales invoices and your creditor invoices in June, and we'll catch them up. But the bank rec's got to be nailed on, and you've got to be, have a set of managements, if you like, as at for the end of May. And that's the crucial bit, really. And then there is some duplication of work in terms of the June stuff, but that for us is a great way of training staff using their own data instead of kind of dummy demo data that's not realistic, that works too nice, you know. So that's the bread and butter is kind of bank rec, debtors and creditors, even them there or thereabouts, and they sometimes things come out in the wash a few weeks later, but try and get a set of managements, if you like, as close to that month end, and they can be maybe 2 to 3 weeks after, which is kind of standard for most businesses up to speed that have got a finance team. They kind of close off 2 or 3 weeks after month end. So just work to that as normal, really, and let us come in and take over.
Charlotte, I might come to you on this just because Stuart has said there about operating towards the month ends and stuff. And would you usually recommend a business do this kind of corresponding with a year end or a quarter end? And have you seen more people looking to do this outside of those timescales?
Yeah, one other thing that I'd say is vital to have up to date is the VAT reconciliation, because it can cause no end of problems if you decide to do a conversion sort of mid-VAT quarter end. You need to make sure that at a VAT quarter end everything's being reconciled so that it just rolls over smoothly from one software to another, to ensure that nothing's double counted and that everything's included. So yeah, definitely I would recommend either at the year end or a quarter end to do a conversion. It just avoids any sort of significant problems. And I think having a set of management accounts or a reconciled TB to then refer back to is always a good thing, because then you know that your starting point is where your finishing point was on the previous software.
Nice, cool. And Matt, I was going to kind of direct this at you in terms of the technology, and if you think there's a minimum amount of technology adoption that generally leads to kind of a more successful cloud conversion, or if that actually isn't as essential or doesn't make that much of a difference.
The fundamentals are like if you're picking up a cloud accounting system, a fundamental is bank feed and then getting data in regularly and that's clean. So things like Receipt Bank and Auto Entry and HubDoc and Data Marina, that getting those in. So I think your starting block always has to be that, because this is real time software. So we need to ensure that we utilize it in real time. And in all honesty, the real problem becomes with these systems is that the data isn't either clean or it's not regular or frequent enough. So that's got to be starting block. I mean, you can build out from that, but that should be your number one priority, is to get the data in. So if you want to use tools like Chaser, you need the sales ledger reconciled weekly in order for that Chaser to come alive. If we're still all behind and the data's not flowing properly, then just make sure whatever your cloud account system is the hub of getting sales invoices, purchase invoices, your bank feeds in, and that reconciliation, because then I think you can do a lot off that. We find that we're getting half in, half out with these, where some have got a bank feed, but purchase and sales data doesn't come in regularly enough, or we've got some purchase data in, the bank feed's running, but there's no sales data. So you just need to look at that sales, purchase, and bank rec. And like the guys said, Stuart and Charlotte, around making sure your balances are right when you start is really important. So yeah, I would be saying that that's got to be your starting fundamental to get the most out of these systems.
Okay. Number one thing.
Molly, do you mind if I just jump in on a point on that, Matt? You talked about the sort of having some elements up to date and others not. And an interesting thing that I've heard some businesses mention they've done in migrating over, it'd be really interesting to get all of your perspectives on this, is do things like, for example, okay, well, we've started using Xero or QBO for our sales invoicing. We're going to get that up and running, and then we're going to migrate the rest of our accounts over in the coming months. So they don't migrate in one fell swoop. They almost migrate piecemeal in different areas of their accounts. Do you have any kind of experience of that? Do you have any perspectives on whether that's a good idea, a bad idea?
I'll jump in. I think it's a bad idea, because we're habitual, we pick up bad habits. So we just start with one part. It's a bit like you look at any process in a business quite often. We'll just do this process short term, and then we'll come back and do it properly. And 10 years later, you've got the same process in your new business. So for me, it's like you should be looking, what's the bare minimum I need to use this system for? And then that's your starting block to bring it in. So essentially, in my opinion, I think whatever your core requirements are, that's what you should aim for from day one to get the most out of the system. I think the phased approach, maybe it's a larger implementation, but you've still got to get that core right. I think just raising sales invoices out of the system for 3 months, and then I'll do purchase invoices. I'm just like, why don't you sort of jump in and do it fully and get the most benefit out as quickly as possible. You just form bad habits, in my opinion, doing that. But I'll be interested to hear what Charlotte and Stuart have opinion on that.
Yeah, I would agree with that. I agree that you should do sort of everything in there, especially, sales invoices, reconciling the bank, purchase invoices. And I think with the right training, often if it can be quite overwhelming. So doing the training in chunks, and as Stuart mentioned, with live data, which is how we do our training, it really does sort of, it goes in a lot easier. So actually, if you do sort of the sales invoices in one training session and then purchase invoices in another and then the bank rec in another, it's easy to take that on board. And I think keeping on doing a little bit every sort of few days, it means that people learn the software easier. So certainly it's an all or nothing approach, I would say.
Yeah, we're similar. We've done it. We've done phased approaches where the client really is adamant they want to do it that way, but they're more difficult. They're more difficult conversions because you're using two systems and trying to match two sets of data, which is a pain. It's more costly for the client because it's more involved. So the core modules are critical. What I would say is that there are some apps, and like Chaser is one of them, where I would never bring Chaser in on day one of moving to a cloud accounting system, because things like that, chasing debts, that automation, that's got room to upset your customers potentially if that's not right and running smoothly. So I would do things like get the sales ledger working in Xero or QBO and smooth for a month, and make sure that list is right in the cloud software before then saying, okay, let's plug in extra apps, whether that's Chaser, etc., things like that. Zavi, whatever it may be, beyond that. But yeah, as Matt and Charlotte said, the core system, Xero, QuickBooks, whatever it may be, it's much easier to do it at the time.
So number one key thing seems to be make sure the data's correct. Make sure you're automating getting that data in so you can have confidence that it's remaining correct, right?
Yeah, and one thing that's, if people are resistant to it and don't get it, one thing that moving to Xero or QBO really does is it brings the warts and all out from your desktop software. And people that don't reconcile a payment to an invoice and just leave it, but the balance says zero. But it's ugly sometimes in a desktop software, and you can get away with it in a desktop software, or an Excel spreadsheet that doesn't balance a control account. You can get away with it. In Xero, you've got nowhere to hide because everything's matched up and accurate and live. And sometimes you see people say, "Oh, it's rubbish this because this is wrong," and it's like, well, it was wrong in the first place. You just didn't realise that. You kind of worked around it. So I think there's almost an education piece on expecting the first month to show warts and all in terms of your finances and things that aren't quite right. And people can get quite defensive on that sometimes. So it's just.
So do you think people should go into this knowing, okay, the first month is likely to throw up a few issues, a few roadblocks? You're likely to see things in your financial data that you maybe weren't aware of and that type of thing, and not to be
100%.
surprised.
100%. I mean, when I pitch the cloud dream, I always say, I do a demo for an hour or so. I say, it's fantastic. Look how amazing it is. You're going to love it. But I always say, look, for the next 4 to 6 weeks, you will hate me and you will think I'm a liar and you will think that I've sold this thing and it cannot do these things. But it can. But it's just, there's an education piece. There's getting the bad data out, and that takes time. So full transparency on this, it gets harder before it gets easier.
Like most of the good things in life, I think there's a weeding period. Cool. Okay. Does anyone have any final thoughts on feasibility? Can we do it before we move on to requirements?
I'd just echo Stuart's point there. If I go back to my own experience as an FD, my the first finance function I ran, we used Sage Line 50, and then the next one was Zero using, and Zero had just recently been embedded. And for the first, it had been a couple of months, I hated it. It's like, okay, all of this stuff that I knew and not necessarily loved, but had grown accustomed to, wasn't there, and it had been stolen from me, and I'd been missold. And then you go past this very, very kind of definite tipping point. So yeah, very much to kind of echo that with Stuart. It's, you get there, but it's a bit of a journey to adjust and then truly see the light. But once you see the light, there's no going back.
Nice. Cool. Okay, well, if anyone does have any more questions on that, as I said, shoot them through to the Q&A box or the chat box. But if we move on now to requirements, so you've decided you want to do it, you're aware of the stuff we just spoke through there. So how do you get buy-in from stakeholders? Maybe start with who are the different stakeholders? I know that will depend on the business, but in general, who are the people you need to get on board? Matt, if you want to give us your thoughts on that.
Yeah, I think to do with buy-in is actually understanding why you're doing it. So I think a lot of when we're talking to businesses about digitizing, you can see the misalignment sometimes. So there's maybe someone driving it who's doing this work daily, and it's a real painful for them, but the person who maybe needs to pay for it or authorize it doesn't see the same pain. Mm-hmm. So we get a lot about listing out what the problems are, what the current system does well, what the system doesn't do well, and what a new system needs to do in terms of mandatory and nice to have. And I think when we start to get that, we've got a standard terms of reference that everyone can go back and refer to. A lot of the time it's very, very, and this isn't going to be War and Peace, by the way, like 100 pages. It can be a couple of pages of like issues. But essentially with that, it starts to give everybody the same understanding of what the problems are. And I think sometimes it's quite emotive to that person. I've got these problems, it's on me, and they just haven't really communicated it that well. So I think in terms of getting buy-in from stakeholders, it's all about the communication, which is essentially just documenting, these are the problems, this is what we need to have, these are the benefits that we'll get from it, whether that's time saving, whether that's better margins, whether that's reduced overheads, whatever it might be. But if we get that written down, we can at least understand what we're gunning for at the end point. And I think that goes down to the requirements as well, like what do we need the system to do if we're going to move, and what will it do, and understanding where the gaps are when you are moving, or what the different process you will need to do that. So I think with buy-in for stakeholders, it's about having a common reference point for why you're moving and what that's going to cover.
Yeah, okay. And is there any, Stuart, I might come to you on this, are there, if you were advising someone to maybe prepare a short document for stakeholders, is there any key things that you'd advise they include in that? As Matt said, be that the time saving they can expect, the long-term cash flow saving or cash flow visibility they can expect, those type of things. Is there a standard that you'd say?
There's a list. There's like, the time saving is a classic one. Oh, here we go. There's the old dog Alfie there saying hello. All right.
Very welcome addition.
Yeah. So there's the time savings, there's the visibility, there's live data, making better decisions, getting paid quicker. There's a list, but what you need to be careful of is defining the why with each stakeholder group, I find, and making that clear. And where the two that went pear-shaped of the 1,000 and odd that I've done were because I sold the dream and a selling point to a person who that was their biggest fear. So the two firms where it went pear-shaped, they had an external bookkeeper that was paid by the hour. And I led with, this is amazing, it'll save loads of time. At our own firm, our internal Sage jobs used to take 18 hours, a quarter to do. They take 6 now, we've moved them to cloud. Boom, 18 hours to 6. And these bookkeepers are paid by the hour, externally by those clients. And as soon as I said that, the face went white and they were like, oh my God, I've just lost a load of revenue. I need to find loads more clients. And naturally, they did everything in their power to make that as difficult as possible and find fault and make it rubbish. So there is a kind of textbook list. Saving time is a massive one, 100%. But how you phrase that and word that is massive, depending on who you're talking to and what you're selling it to. So that's kind of the word of caution on that one.
So pitch it with the right benefits in mind for who you're speaking.
Yeah, and what they're trying to do. So that bookkeeper,
Yeah.
it's, you could give better advice, you could do more, you could move into like whether it was debt chasing, that kind of thing.
Mm-hmm.
You could get better reporting. You're always chasing your tail. You're not annoyed that you're having to chase your clients to get the information. Well, now you can control it better. You can do it more from home. You don't need to come and visit the client every time. Maybe you could visit once a month, but work from home 3 times. Like whatever their selling points are. And for the other one, the strong sell for me isn't just the zero QuickBooks style website ones. It's, do you know what? Like, do you want more time with your family? Do you want more time to go on holiday? Like, those are big things. Do you want to see your kids at the weekend instead of typing up a spreadsheet? Do you want to see them play football? They are massive benefits to get buy-in, more than, oh yeah, you'll get blah blah blah, save X amount of hours on the actual data. Like, so go beyond how it affects that person's life. And that's very powerful.
Yeah,
I find anyway, very powerful.
From our perspective, David, as well, within Chaser, we've definitely seen that if you can position the benefits in terms of what that person actually cares about, it can have a much bigger impact. Great, okay. And then in terms of data, Charlotte, I might come to you on this lovely question. Everyone loves data, don't they? But for example, if someone's moving from Sage Desktop to whatever cloud accounting system they are looking to do, or they're moving from spreadsheets or whatever it is, what kind of, we spoke about it a little bit, making sure the data is clean and stuff, but what kind of steps would they need to take with that data itself?
So it's just making sure everything is entered up to the quarter end, making sure that the bank is fully reconciled to the statement. It can get a little tricky if you've got unreconciled items at the end, so it would be, you'd need to take into account those and make sure they're dealt with properly. Reconciling debtors, creditors, VAT, and basically all control accounts. So, doing sort of a quarter end reconciliation of everything, and then once that data is ready and reconciled, it's ready to convert.
Cool. Okay. Anyone else got anything they'd like to say on this before we move?
I'd just add to that, what I often see missing on desktop software is like customer and supplier details within the system. So the amount of email addresses that aren't in there because it's not often used, maybe to email invoices over. And then they move to Xero or QBO and want to email customers out, and that data isn't there, or it'll send it to 10% of them because that'll be sat in another system. So gathering that information and getting that onto the spreadsheet for the import early doors makes life much easier than getting it all in and then having to mess about updating it. Again, that's one that often gets missed, I find.
Cool. Anything else? We can move on to the actual implementation. Cool. Okay. So the good stuff. So how long does it typically take? We've kind of covered this slightly in the sense of you all agreed that it would take at least a month to 6 weeks to actually iron out all those details. But Matt, let's maybe go to you. Maybe let's focus on what's the usual point where people start to come back to you and say, okay, yeah, like this is amazing. I'm so glad we did this.
I think with most things, I think it's around about, it really depends on how quickly they adopt it after you've done all the implementation. But we tend to find within about 6 to 8 weeks, people wouldn't turn back once they've done it. I think like Stuart said earlier, people aren't going to like you for doing this to them for a while, but then the benefits start to come. But it's just hard when you're getting things set up and maybe there's data and processes just to redefine as you're going through it and get a new system to see all the benefits, but eventually start to spin out. But we tend to see, we do bigger implementations with other systems as well that link into cloud accounting. We tend to see that's about a 12-week window, so slightly less complex implementations. We sort of see 6 to 8 weeks, people start to come round. But what I would say, actually, on Stuart's point from the last section around people are the biggest risk to this happening. It's not normally the software, it's not normally the process. If there's somebody in there who doesn't want to do it, it won't happen. Whether it's a good fit or a bad fit, it's irrelevant. It's people will make this work or not. So we raise that as a risk when we go into implementation with with businesses to the stakeholders, say this person's not really playing along, this could be a problem longer term. But yeah, in terms of getting some feedback, I think it's the 6 to 8 week. But I haven't done 998 cloud accounting implementations, so I may be wrong.
And David, if people are looking at, okay, when can I feasibly start introducing apps like Chaser? Have you seen any feedback from Chaser users about, what else they need in place to make that implementation successful, and how, maybe not how long they've typically been using the accounting software, because we might not have the data on that, but yeah, what they need in place before they can start to introduce apps like Chaser, like cash flow forecasting and that type of thing.
Yeah, and I think typically, and it will vary from business to business, but typically, and I'd really welcome Stuart, Charlotte, and Matt's view on this, but typically the view has been sort of 3 months post kind of conversion is when you're at that point when you've got your bank feeds running really well, so you can have complete confidence. You've got your bank feeds running well, you've got your sales invoicing process running well, so you can have confidence your sales ledger is correct to be able to use a product like Chaser. You've probably got your whether you're using Receipt Bank, Auto Entry, HubDoc, but you've got your kind of your purchase ledger kind of automation running really well. That's the time to be looking at a product like us. You've got the foundation of kind of the day-to-day data, and it's then next, okay, how do I start getting invoices paid as early as possible? But I'd equally really welcome the views of our panelists.
Stuart, you look like you're
Whether to unmute, hovering over that unmute button then. Yeah, similar. I mean, 3 months in is a nice period for things like Chaser and the additional start of apps. To say the first month or so, 1 to 6 weeks tends to be the difficult period. And your first kind of app you bolt on is something like Receipt Bank or the HubDoc for your scanning your purchase invoices, and that tends to be like the go-to first one, which can be implemented at the same time as your core accounting module, makes life easier. And then 3 months onward, it's an interesting one. Some of them have been 12 months, 2 years onwards, and still it does vary from client to client and appetite for it and want to take it on. And there are certainly some that like really grab it and really get to it. And every 3 months when you're having your catch-ups, they're almost what's next. It got to the point where we took a few clients to XeroCon this year that they were so on it and wanting to see it for themselves that we actually took them to XeroCon.
Wow.
So I don't think it ever stops potentially. Like there's the way technology evolves at the moment with updates and products, that I don't think it's quite like desktop software where it's in and it's done, that it will keep moving. And even if it's in 12 months, 2 years, that something might change in the business that means that we can now use another app, or an app might develop another feature, and then we're in. So I don't think the conversion process, it doesn't stop. It's not a one-off like it was in years gone by.
Interesting. Yeah, so it's kind of get the core of the cloud accounting data set up, and then the beauty of it is that as your business changes and evolves, that you can add in different apps, change which ones you're using, and ensure that your system's always updated.
Yeah, I think so. And there are two that I've started using. Xavier and Clarity are two like that unlock the door to that. They're the health check ones, or the how our business is performing, and they're the ones that the client won't use them. You won't give them to the client, but you use them with the client to assess the data, look at the strengths and weaknesses and where they want to go. And it's based on those two apps really that open the door then to the Chasers, to the Fathoms on right, what do you want to use and what do you want to get out from it. So I found that those have been really, really useful for setting the roadmap, if you like, for the next 12 months.
Cool. Okay. And then one question which people might be wondering is, with this, let's say, month to 6 weeks of where you're first implementing it, Charlotte, I might come to you on this. What should people be doing with their accounting data in that time period? So, for example, their new sales, or they're issuing invoices and that kind of thing. How should they manage that, transition?
Yeah, well, I would say to continue doing what they do with the sales and purchase invoices to ensure that they've still got a live system that's up to date. The downtime would be for any conversion, so it might take a couple of days, it might take a week. But then, as Stuart touched on earlier, live training with their own data is really good. So those sales invoices that they have put in to their old software, they can be used as a training element, so that can be then put onto the new software. Equally, if there was a lot of sales invoices that had been entered onto, say, Sage, they could be exported and then imported into the new software. But I think it's really beneficial to use some of those invoices, obviously, to train the client as well.
Mm-hmm. Cool. Okay. Any other thoughts on kind of things to watch out for or tips? No? Cool. Okay.
Only thing I was going to add is just expect it to be, can be a rocky road, just implementing software and new processes. So there are some bumps in the road. It's just to be expected if you're going to be going through that.
Don't be disheartened. Keep going. It'll be worth it. Great. Okay. So moving on to the who, and who can help with this, and some complementary software solutions and that kind of thing. Matt, do you want to maybe give us kind of a brief summary of the help that you can provide to businesses who are looking to make this transition?
Yeah, we're helping businesses essentially look to digitize their business. They're normally already on some sort of cloud accounting software, or cloud accounting software isn't the only move they're doing. So we don't tend to do a lot with online sellers and wholesalers and distributors. They're the sort of businesses that we tend to help quite a lot. We're seeing a lot more online selling, as you'd anticipate, in this world that we're in now. So yeah, we're helping that. We've got a process of gathering requirements, selecting the right tools, and then we've got an implementation, training and support team. So yeah, essentially when we look at the business, we're looking at a health check of their business and their systems when we kick off, and that gets us running. So that's a little bit about us. Yeah.
Nice. Okay. And then Stuart and Charlotte, maybe we can just chat briefly about the role that a business's accountant can play in this, and the support that they should be providing to their clients. Charlotte, I might just come to you first on your thoughts on that.
Yeah, so as an accountant, you should be obviously offering these services to clients and be there to support them. So often the journey is, you can see that there's a benefit to offering cloud to the client. You could then do a demonstration to the client, which usually gets a lot of buy-in because they can see the benefits. You then would go on to do the conversion for them, obviously guiding them through what they need to do to the data to get it up to date and accurate before that conversion happens. It's also discussing the requirements. What do they want out of that software? How do they want it to be set up? Because it doesn't just have to be set up in the same way their old system's being set up. So there's lots of things regarding that. And then it would be bespoke training sessions, just what the client needs. And then also being that support service, so an email, a call, with any queries. You're not just left on your own to deal with this new system. That the hand-holding's got to be there. And as Matt mentioned, there is a lot of pain at the start, and it's not an easy journey at the start, but it is well worth it. And definitely by the 3-month point, it's all working smoothly 9 times out of 10. So yeah.
And Stuart, I might come to you from a business perspective. If a business owner or a member of the finance team or whoever it is has identified that this would really help the business out, what's your perspective on, should they try and do that themselves? If they approach their accountant and their accountant doesn't use these softwares, what are the next steps for them there?
Get a new one. No, I mean, so we have had some clients that have done it themselves, and it's a bit like DIY, or there are some people that are amazingly skilled that get the numbers that can pick it up. There have been a few that successfully can convert themselves without needing an accountant. I'd be lying if I said, oh, you must have an accountant to do it. generally speaking, those are really straightforward ones with a small number of invoices, with a small team that's and they're all on board from the word go. Mm-hmm. What we often see is those that go solo, that, you know, we do a pitch, they want to go solo, they don't want to pay us for the support or the conversion help, end up coming back when it has become a bit of a mess, to be honest, and it's more costly, more time consuming to sort it out. And then you've got a team of people that hate it, like really hate it from the word go, then to try and get it right. So I would say 95% of the time, if not more, I would advise that you should get a professional in there, an accountant or consultant of some description to monitor that. And I think also it helps create accountability. You know, that's what we want to do. We want to set deadlines for, have you got the data ready by this point in time? Where's it up to? Right, we said we'd do this by this date. Where's it up to? Just having someone there almost cracking the whip really and planning that out can help. And, you know, most business owners don't find enough time in the day as it is. So then having to coordinate a conversion can be really difficult. So let us take that away from you, the planning and timescales, and assign different tasks to different peoples, and we can help make people accountable and make things happen a bit quicker. Let's say it's as Matt said, it's still not smooth, it's still rocky, but you know, you've got someone kind of overseeing external. It generally makes things a little bit easier.
And potentially even more so if we're thinking about shifting in the current situation. Would you say it's more important to be getting that professional help, or what do you think?
Yeah, I think so. Just for the difficulty of coordinating activities, generally speaking, and keeping everybody on board.
Everyone's already got so much on their plate.
Yeah, that's it. We're finding, you know, a lot of people are still really busy. But, you know, the tech's there, things like these Zoom meetings to get people together in groups, it's still doable. If anything, you know, you say you've got more reach than ever before. Sometimes it used to be a right nightmare. Sometimes trying to get the owner and the bookkeeper together to do the demo at the same time was often difficult. I'm finding that is now easier in the Zoom world that we live in.
Yeah, interesting. Okay, and then kind of final thoughts on this. I know we're running close to the clock. But David, I might come to you on this, because I know there's just so many apps out there. Where do you think people should start? I know we've said, you know, get the likes of Receipt Bank, HubDoc, or Auto Entry in there, but as more so than the actual implementation, what should people start by looking at? Where do I need these apps? What are the holes and that type of thing?
Yeah, great question. I mean, we've always, I think, talked about the kind of the trinity, if you will, of, so absolutely your Receipt Bank, HubDoc, Auto Entry to get the kind of, you know, the expense information up to date. Then it's your sales ledger. You know, with a chaser alongside a, you know, where relevant for you, something like a cardless, if direct debits are an option. And then it's looking across the top, right, to your kind of, you know, I guess your business sort of management reporting, and that might be a tool like kind of Fathom or Spotlight. But particularly today, your near-term kind of cash flow forecasting is going to be key. So, you know, a tool like Float or like Futurely, which, you know, Futurely also your kind of top level reporting as well. But I think, yeah, you're probably today going to want to be focusing on your near-term cash flow and making sure that is stable. I mean, if you're a business that's not needing to worry about near-term cash flow right now, great, you can focus on your top level reporting. But yeah, so I'd say it's your expense automation first. It's you're getting money in through a combination of a product like Chaser plus, say, Go Cardless if direct debit is relevant for you, and then it's the top level. Okay, what's the data telling us in terms of how the business is performing, and if near-term cash flow is an issue, then yeah, something like a Float is probably going to come first there. But that's the 1, 2, 3 that we typically.
Okay, and I think something to kind of really focus on here as well is for businesses who are considering this. There's a huge amount of support available from the individual apps and onboarding and training and everything like that as well. So don't be overwhelmed by the idea of, you know, okay, I've just moved to a cloud accounting software and now you're saying I should use another one and another one. There is support and training involved. So don't be put off by that. And finally, we're just going to chat about the what. So software options that you should be considering. We all might have a preference. I think the key thing is probably to look at what's right for the individual businesses. But if anyone wants to quickly jump in, maybe what you would recommend as your go-to. Stuart, I think I know what you were going to say here. But just like a quick things you should consider from your business when considering the cloud accounting software. Stuart, do you want to start?
Yeah, obviously, yeah, Xero is a firm fave. Xero and QBO have been two great products. Mm-hmm. The biggest thing to consider, I would say, when you move over is, are there any other pieces of software that you've got that are often feeding into, say, Sage Desktop or whatever it may be, your accounts systems? Because one problem we sometimes get is, if I've got a third party that's talking to my desktop software beautifully, and then I move to cloud, is that going to continue talking nicely, or is there going to be some data import, Excel import to get that in? And that can get ugly and messy and actually slow things down. So the biggest option to consider is that is, are there any other pieces of software that are communicating at the moment with my account software? And I have to 100% know that's going to work and test that before leaping over. You can get burned in that sense. And then the other thing is just mapping processes. Matt mentioned before, map your process out as you do at the moment, and then what they're going to look like and how they're going to change going forward, really.
Mm-hmm. And Charlotte, do you have anything to add on that?
Yeah, I'd just say obviously Xero and QuickBooks are the sort of cloud products that I would recommend, and it's just really understanding what currently happens in the system, and understanding which software would suit the needs of the client best. I think it just depends as well on how if there's any other systems that are being used separately, and work out the whole ecosystem. You might not do that initially and put all the software together at one point, but if the longer term is to get a stock system in place, then it would be sort of identifying which stock system you might need and which it would work best with. So I'd consider things like that.
So potentially to try and not necessarily implement the long-term strategy immediately, but know where you're trying to get to.
Absolutely, know where the end goal is and think about it strategically.
And Matt, would you agree with that, or?
Yeah, absolutely. I think knowing where you're trying to get to is good, and I think trying to remove all those gotchas, which both Stuart and Charlotte mentioned, are other things to think about. And I think the other consideration that businesses have got to make when they're doing this is there's an investment of time and effort on their part. It's not you're just going to pick up this piece of software and it's going to work amazingly. And also, I think we also see some businesses try and put the system in to do exactly what the previous system did and almost use it in the same manner, which isn't getting the benefits of the new system. So it's understanding why you're moving as well. Are you moving because the old system didn't work that well and you want this system to not have the same problems? Or maybe it was the processes around the old system as well as the software. So you need to look at the processes and the software in conjunction, and just be prepared that you have to do some thinking and spend a bit of investment of your own time in terms of understanding how it can work best for you.
Okay. So general consensus is it's going to depend on your goals and the business, but definitely make sure you're looking at the different solutions out there. Yeah. Cool. Yeah. Okay. And then I'm not going to spend too much time on this because we are cutting close to the clock, and we've got some questions come through and I want to get to them. But costs, again, generally, it's going to depend on the size of the business, what you want, all of that type of thing, right? Okay. And I think if anyone does want to chat more about costs and everything like that, we'll include the emails of everyone in a follow-up email. Stuart, do you have anything? I just see you're unmuted.
I was just about to say, just don't accept a free one. Like if an accountant says, "Oh, we'll do it for nothing," they don't know what they're doing, and they can't give you the support. Like there has to be a cost to give you the level of support you'll need to get over it. Otherwise, I don't trust. It's too good to be true.
So if you think it's too good to be true, it's too good to be true. Okay, cool. And yeah, as I said, I'll include Charlotte, Matt, and Stuart's emails in the follow-up email if you want to chat to them about costs. Great. Okay, so questions. We have a question here. We've recently moved to Zero. Unfortunately, it does not give us the same reporting options as we had with Sage. So if anyone has advice on how to solve that, or maybe there's some things within Zero that they haven't discovered yet, or possible add-ons that could solve that. Whoever wants to jump in, really.
Depends what data they're after, but like I've said before, Xavier is really cool for health check and can also do some like dirty data stuff in terms of like audit trails and what timings of postings. That's one I get criticisms of Zero, the audit trail, and searching that if that's the report that they're after. Then Xavier's can pull the data out and do it Excel style pivot ones is one that we use quite a bit to get around some of the reporting issues.
Mm-hmm. Matt, do you have any?
Yeah, we've had some joy with some more complex reports that haven't been able to be covered by Zero or like a Fathom or a Spotlight or Futurely, and they've been utilising Data.
Okay.
Again, that just pulls everything out of tools like Zero into spreadsheet and Excel, so you can start to manipulate it yourself. Okay. So that might be an option as well, similar to what Stuart's saying around Xavier. You're getting the data out and you can manipulate it yourself.
So I guess, maybe the spirit of the question as well is, they were using Sage and were happy with that reporting functionality, now move to Zero and feel that it's lacking. So potentially not to be put off by that, but to see how many different reporting tools you can now use because you're using a cloud accounting software.
Molly, I'm just going to jump. Sorry, I'm just going to jump in because I see Mary's followed up by clarifying.
Oh, sorry.
For debt collection, and
sorry,
it's very much not a chaser kind of plug, but kind of not red rag to a bull, not going to miss the opportunity. But Mary, there is some fantastic kind of reporting functionality within Chaser, alongside our very recent fantastic promotion to get to earn yourself 3 months free use of Chaser. So please do check out and have a look at a trial.
Yes, nice catch, David. I didn't do that.
The other one just on the Zero reporting is they are back to front of what you do them in Sage often in terms of the dates of the reports. In Sage, you put the year-end date and look for things after it. In Zero, you put today's date and work the other way, go backwards. And I've seen people say it can't do like age reports very well, and it can. It's just a back to front way of what you used to on Sage. So it might be that it's just being used the wrong way. Not necessarily it is, but it is just your dates are the other way around. You always start with today's date and go back rather than start with your year end going forward. If that makes any sense. Good
to know. We've got a question here. How tough is it to move from free agent to Zero? Does anyone in particular have any experience with that move?
We've done a few, probably about 5 or 6, and we've used just the templates for the imports on the customers, suppliers, and importing the data. What we'll tend to do with stuff like that is we won't import the full history of everything since the dawn of time. It'll be debtors and creditors that are outstanding on an Excel import, and monthly journals for your last 2 years P&Ls. So you've got that, but it wouldn't be a detailed conversion.
Okay. So would you recommend this person to maybe look at what supports and services are available to help with that transition?
Yeah, I mean, you need to, I wouldn't go solo with it for sure. I would suggest that you speak to someone about it, but it is doable.
Cool. Okay. Let me see. I think that was all the questions actually. Thanks to everyone for sending any through. And that's it. Thanks everyone for joining. I hope it was useful. If anyone has any kind of final comments or closing remarks they'd like to say, please feel free.
Molly, I think there was just one question in the chat from Liz Turpin about whether this is being recorded and whether it will be sent through to attendees afterwards.
Sorry, yes, I've got the Q&A open and the chat. I'm trying to go between. Yes, it's being recorded, and I will host that on a landing page and include that in the follow-up email as well with Matt, Charlotte, and Stuart's contact details so that you can get in touch if you'd like to. So yes, don't worry, that will be sent on. If not this afternoon, tomorrow morning, depending on how technology is feeling. So yeah, thank you all so much for joining. I hope this has been useful for everyone. I've certainly found it very interesting. And keep a lookout for any future content. And yeah, as I said, look out for the follow-up email.
Cheers, Molly. Thanks a lot.
Thanks, guys.
Thanks, everyone. Bye.
Thank you.
Cheers, David. Bye.